You're welcome back to my YouTube channel. In this video tutorial, I'll be taking you through on the risk management that I use to manage my risk while trading on futures. One of the major challenge of people is managing their futures trade, managing their portfolios while trading on futures. You'll be hearing of, hey, I've been liquidated, I've lost my capital, and so on and so forth. And one of the things you need to learn while trading is you need to learn to control your greed, and you need to learn to control your emotion. If you are not yet emotionally balanced, don't venture into trading futures. Don't venture into trade. Just stick to sports. Stick to trading with sports, or be an hodler, someone who will hold, buy and hold for long. So if you have not watched the previous video, I will want you to watch the previous video first on how you can trade futures market on Binance. So having understand that, then you can move to how to manage your risk while trading. So now the first thing I'll be doing now is to let me just transfer little amounts to my futures wallet again. Okay, I just transferred in $30 to my futures wallet now, for this example I want to do. So now I've explained isolated, explained cross, that when you are trading with cross, if you enter a position with, I have $30 here now, if I enter a position and it cost me $2 to open that position, if that $2 gets liquidated and it doesn't hit my stop loss, it will enter into my available balance and keeps eating from the available balance. But when I select isolated, when the stop loss, when it touches my, when it enters $2 loss, if I enter a position with $2 and it enters $2 loss, it won't pass that $2. Even if it doesn't hit stop loss, it will just get liquidated. So that's the difference between cross and isolated. So for a start, I would advise you trade with cross, with isolated, I mean. Then now, rule number 2 that I want to give you is that ensure that you trade with only between 1 to 5% of your total trading capital. On each trade you place, make sure, for instance, this is $30 now. 5% of $30, 10% is $3, 5% is $1.5, and $1.5, then 1% is lesser than that. So if I will be trading, if this is all my trading capital, if I want to trade, I must stick with $1.5, meaning that I can only afford to lose maximum of $1.5 on this trading capital on each trade. So that is rule number 1. So I must be able to manage myself and make sure that I don't trade and lose more than $1.5, which is 5% of my trading capital. Yes, one of the places people do mistake, you have $30 or you have $100, and on a single trade, well, it depends on how you trade. There are people who trade this way. I think I've done that before when I was trading on Bybit. I used 100% of my trading capital, and the reason then was because I was trading only one asset, which is BTC USDT, and I was running a challenge. So a challenge, and the challenge, I will lose I will still lose 5%, only 5%, because 0.5. I'm trading on 5-minute chart, 0.5, and on 10x level just 5%, and when I gain 10% on 1.0. So it's still the same thing, but that's trading one asset. But if you are on a group like my VIP group, where we give signals and you want to take trades, we don't give one asset, we give several assets, we give several trades daily. So you won't take all your capital on one trade. You must manage your capital, you must manage your trade. 5% will be discharged on each, and if one hits 50%, 40%, if sometimes you don't even need for it to get to take profit, just close it. Once you are satisfied, close it. So that's where you build your capital. You build your, if it hits 100% now, that means 5% is on your trading capital on just a trade. If that trade touches 100%, that means there is 5% because you are using 5% to trade, and that 5% of your trading capital is 100%. That is 5% on your trading capital. So that is how you manage your risk. That is how you manage your portfolio. So the tool we'll be making use of here is that. Now, another thing I want you to know before we continue is that make sure you always trade with stop loss in mind. Make sure you always trade with stop loss, and make sure you always watch your liquidation price. So the things that are relevant here, that I want to open your eyes to, there are just four, which is stop loss, position size, leverage, and liquidation price. Stop loss, position size, leverage, and liquidation price. Stop loss is what is being applied to protect your capital. So that is, if that stop loss price, if it gets to a particular price, let it just stop me in the market and take the loss. Let's say it's already on $2 loss. Let it just stop the market, stop me from trading, and take the $2 loss. Then position size is the amount required to maintain a position. For instance, this is $30 on the futures trading platform, my future trading platform. Now, if I want to enter the position, let's say I enter a position with $1.5. Now, so if you see, okay, now this is BTC. I cannot just enter like this. So $1.5. So $1.5 is what it costed me to hold the position. But while if I'm trading with 10x, if I enter with $1, in reality, what I'm entering with is $10 because I am using leverage. If you have not watched the previous video, make sure you watch the previous video. You'll find the link in the description, or you can check the list of my video. So when I trade with 10x leverage and I'm using $1 or $1.5 to trade on a single trade. So because I'm doing 10x, it means it's 10 times 1.5 or 10 times 1, which is $10. So I'm trading with $10, but it costed me $1.5. So that is the position size will now be the $15, while the cost is $1.5 and the leverage is $10. I hope you understand that. Let me go to my calculator so that I can see what I'm saying. If my leverage, I'm trading with 10x leverage, and then from my $30, I'm using $1.5 to open a position. So I'm opening a position with $1.5. So 10x leverage times 1.5. So that means my position size is $15. I mean, the position size in USDT is $15. So I'm using $15 to open a trade. So the next thing now is liquidation price. Liquidation price is that price that okay, I think the best way to explain this is to explain practically. So let's go to the calculator. How you can manage your risk. So you need to be able to use the calculator here. Anytime you are given a signal, if you belong to a group like our VIP group, if you're interested in joining the VIP group where you get signals daily, it will cost you monthly. It's just a little fee attached to it. Then you can join the group and make your money. You don't need to analyze the market. You'll be given the signals. You will lose some, you gain some, but the major thing is to apply this risk management, control your emotion, and grow your portfolio daily. So you need to open this calculator. Let's say you are giving it some parameters that, okay, these are the things, or let me just open. I think I dropped. In case you have not joined our Telegram channel or WhatsApp group, you can find the link on the description to join. Let's say I dropped this now. Is an example. Let's say I say short BTC USDT at this price. And short BTC is sell BTC at 31,241. Now it's on limit order. The reason why it's on limit order is because the price hasn't gotten to 31,241. So if you say market order means that execute at the current market price. So it will directly open the position, as I've said on the other video, directly open position. But if it's on limit order, it will be here until the price gets there. It will now activate the trade. So this is market order, but on limit order, because what we are giving is higher than the current market price. So we said, okay, limit at this price. And we're also giving our stop loss and take profits. So what you want to do is to calculate the position size, the amount it will cost you to hold that position. Now, so what do? Go to calculator. So once you click on calculator, now as you can see, the PNL means profit and loss. Target price, you can use this calculator. As you practice, you will understand more. This liquidation price, well, let's just work with this because this will also show us some other things. Now, so we are shorting the market. I want to use 1x. So the entry price is, the price we are giving is 31,241. The stop loss is this, while the take profit is 33.95. So then you begin to quantity of USDT. Now the quantity of USDT is the major position size, as I've said. So let's say 15 now. Let's type 15. Now it couldn't enter. The reason it couldn't enter is because of BTC. Now because of BTC, the margin of BTC is high. Now let me increase it to 20, 30, 40. 40. I think I'm having an issue with this thing. Now let me do something. Now, when you're having issues this way, just go back to your Binance and I will increase my trading capital now. I will increase my trading capital. I want to stay in the limit. I don't want to have all the trading capital here. That's why I'm doing it this way. Okay, I just added 10 to hit now. So let's go back to calculator and check now. So shorts 1x. What's our entry price? Our entry price is 31,241. 31,241. Then quantity, let's select 15. Now I'm not, if you are the one, now we are not doing BTC. BTC is a market that requires high position size. But if you are giving other signals, the same thing I'm doing is the same thing you will follow. But now because it's BTC, I'll be using all the trading capital I have there, 100% of it. So but I just want to show something here. Okay, let me just select 100. Now look at this. Now what does this mean? On shorting BTC on 1x leverage, the entry price they gave me, the exit price. So if I enter 100 as the USDT that I want to use, they said the initial margin that it will cost me is $93.72, and the amount I'll be losing from the total price, from the total, is just $2.35. 2.35%, and it's $2.20. So $2.20 is what I'll be losing if the exit price that was given is the stop loss. So meaning that if my trade gets started and it eventually hits the stop loss, from the amount that I'm trading with, I'll be losing just $2. You getting that? Now let me reduce it. Let's say I wish to just lose $1.5. I wish to just lose $1.5, so I'll be entering 50. 70. So 70. Now he said it will cost me 62.48 USDT to maintain the position. Note, it wouldn't be like this. The reason it's like this is because of the analysis that was given the BTC. It was just given randomly. This is just a random trade and not a real trade. Now, okay, if I increase the leverage, let's note something here. Let's say I put it on 5x and I calculate again. Can you see? Now, can you see that leverage doesn't matter? Immediately I increase the leverage, I will still be losing $1.5. And my initial margin, the amount it will cost me to enter the position, reduced. Instead of $68, I'll be using just $12.5 to enter the position. Now, so let's say I increase again to 20. Now, I'll be needing just $3 to open this position. And from the $3, I'll just be losing $1.47. I'll be losing 5% of $30 that I had there before I transferred the $10. So that is how you will filter your trade. You must make sure that the position size, you will keep on changing this thing here until you are able to maintain your position or your 5% of the total capital. So $1.5 is the 5% I can afford to lose on the trade, and that is what I'm having here now. That's what I'm having here now. So if I want to apply this is 20x. So what do? My entry price, I copy my entry price. Now watch this. Now let me take it back to 20x. Now, this is the entry price. Paste. Now this is my exit price, which is the stop loss, and the take profit too was given. Now let's check the take profit. If 30, I think the take profit there, I mistakenly pasted this and it can't go back. Okay, let me do this. So let's say 3188. I'm just trying to analyze something here. 3188. So let's say my take profit is 3188. Then now, here is where you input the position size. There is BTC here, there's USDT. So you select USDT and just type the 70. The 70 we have here. The 70 we have here. The 70 we have here, we type here to be able to get this value. Is the same 70 you will type here. So when you type the 70, so when you type the 70, you click on, can you see what it will cost is $3.13. Let's check our calculation. What it costed according to this is what? $3.12. So it cost me $3.12 to open this position of $70 on 20x. So 70, and I click on sell. So when I click on sell, now I've opened. Can you see that my balance reduced? So if this price here, 31,131, if the price hits 31,241, merely hit that position, hit that place, it will open the trade directly. So but if it keeps on going up and it touches this stop loss that I input, stop loss of 31,975, it will close it with the loss of $1.5. And if it hits the take profit, it will close it. Okay, let's check the take profit price. 3188. 3188. Now if it hits the take profit, this is what it will be having. Now it's just a random trade. Lose $1.5 and gain $2.11. So I think it's still okay, even though it's a random trade. It's not a trade that is certain. It's not a trade that was analyzed. It was I just gathered the figure from TradingView to just look at it and scalp it. So that's how you calculate your profit. That's how you calculate your position size, how much it will cost you to hold the position and the position size, and then the profit and loss. That's how you calculate it using the calculator up here. Using the calculator up here. So I hope you've been able to gain some knowledge on how to manage your risk. How to manage your risk. Make sure you follow this video. You may need to watch this video over and over again to get how to do it. So what you will be doing is that once you are given the value, once you have your entry point, exit point, which is your stop take profit and your stop loss, then just click on the calculator based on your capital. Go there and you can even come here and click on 5. Now one thing, okay, lest I forget, one thing you have to take note of also is that if when you are checking your stop loss, when you enter your stop loss price, exit price, and your entry price, and this PNL, okay, 3,500. Let me just use an example. Then say long, so 30. 30,000. So let's say 10. I'm trying to get something here. 40. I'm taking my time to do all these videos. Now, okay, let's move it high. So when I increase the leverage, look at this. The initial margin that it will cost is $0.4. When I increase the leverage, the same profit, the same loss. Now, why the profit and loss will be $0.5. So I'll be losing 0. No matter the leverage I use, that's the amount I'll be losing. Can you see? So that means leverage doesn't mean leverage. That's why most people don't know that leverage is not the major thing. What the major thing here is your quantity, the position size that you are entering with. So, but where your leverage matters is the fact that now when I increase it to 80 something here, can you see the initial margin is 0.36? Why the loss will be 0.35? Meaning that it won't get to stop loss. It won't get to this price before I get liquidated. That's what they call liquidation. So it will the 0.36 before it gets to that point, it would have lost the 0.36 without touching my stop loss, which is not okay, because what stop loss does, before setting stop loss, there is something those who analyze the trade had in mind, that okay, if this trade crossed this boundary and it crossed the boundary, the price may further continue going down if you are longing an asset. But if the price gets there and it doesn't touch the stop loss, there is possibility that it reverses back and still go back in your favor. I hope you get that. So what if you have been liquidated before you get to the stop loss? That means before you get to the stop loss, it just reversed after already liquidating your own price. That means you just lost money unnecessarily. So that's why we have to reduce this thing back until the initial margin is greater than the loss that we will have if our stop loss is hit. I hope you understand that. So make sure you watch the video over and over again. And if you don't understand anything, just ask me on the channel. Make sure you subscribe to the YouTube channel. There's more subsequent videos that will be dropping to enlighten you the more, and different trading strategies you can use, and how to grow your portfolio, how to grow. Maybe we'll even start a challenge very soon on my VIP group. If you're interested to join the Signal group, you can message me, you can drop a comment, and also message me on through Telegram or the WhatsApp group. So you are welcome to do so. So thank you very much for staying through this video. I hope you have gotten any value. If you have gotten any value, please thumbs up, subscribe, and share the video with your friends and family. Thank you very much, and see you in the next video.